watching Business World Live. I'm Danie Laurel. It's the start of a new trading day. Let's kick off with our top story. The country's external debt reached its highest level since 2012. That's on the back of massive borrowings that were meant to bankroll the government's COVID-19 response programs. Data from the Bangko Sentral showed that external debt rose by 17.8% to nearly $98.5 billion as of the end 2020 year on year. The end 2020 external debt level is equivalent to 27.2% of the GDP. That's higher than 2019's 22%. The Bangko Sentral said the increase in external debt stock was attributed to borrowings to fund the national government's pandemic response and infrastructure projects. Meanwhile, the administration's economic team is conceding that a surge in new cases is threatening economic recovery. Finance Chief Sonny Dominguez said the uptrend is certainly not helping a recovery. Despite the surge, NEDA Acting Secretary Carl Kendrick Chua said the government's aim to grow the economy by 6.5% to 7.5% this year is still achievable. Chua said the NEDA is supporting localized lockdowns while the DOF has been pushing for a prudent fiscal response for the government to conserve its resources. The spike in cases has prompted the interagency task force to impose general community quarantine restrictions on Metro Manila, Bulacan, Cavite, Laguna, and Rizal. Cross-border travels and mass gatherings in these areas will be prohibited starting today until April 3rd. In effect, these areas will be a, quote, bubble where residents can only travel within Metro Manila and these nearby provinces. Only essential travel in and out of the mentioned areas will be allowed. Restaurants in the GCQ areas will also be limited to delivery, takeout, and outdoor dining. Okay, guys, we're bracing for another slide this morning, but what kind of a slide are we talking about? You can see the local index plunging 70 points to 6,300 levels this morning. That's down 1.09%. You can see on my terminal here that we're now at 6365.70 this morning. Now, of course, this comes amid all of these announcements over the weekend. Recall that already last Friday, we had already nosedived by close to 3% of losses. We had already closed just a little bit above 64.30 on March 19th. That was already the lowest in nearly 5 months, and that brought our weekly losses last week by 4.4% of a loss. Now, that brings us year to date to the worst performing among the key global benchmarks. We are down close to 10% year to date, and it seems that that slide is not ending anytime soon. Now, recall that the biggest losers on Friday, and I'm going to be pulling out the chart for you so you can see the movers this morning. The biggest losers on Friday were the retail companies as well as the restaurant operators. So Jollibee and SM Prime, the biggest hit here. They sank more than 5% each, but you can see on my terminal here how it's just a mixed bag of who is leading the losses this morning. Security Bank down by 3.2%. LDG, Mega World, so really mixed picture here, but you've got only 3 in the green, Globe, Aboitiz, and PLDT. So notably, the 2 telco players. Now, with these targeted lockdowns at the LGU level, this according to Tina Ulang of First Metro Investments, she says that investors are now worried about not just the risk of infections, but really what will be a riskier, weaker than expected corporate earnings picture. And thus she sees a downward bias for the index. Now, meanwhile, you've got Mike Ricafort saying that immediate resistance may be from 6,600 to 6,700, but the major support is at 6,400, where the index has stayed for the past 5 months. And you can see on my terminal here how we've broken through what Mike Ricafort has said should be the major support level. We are 6,300 right now. Now, I also want to point out something that we are going to be closely watching for this week, and that is what the BSP will be doing on March 25th. But the poll says, according to all 19 analysts polled by Business World, they're unanimous in saying that the BSP will keep the rates untouched from at least for the next policy meeting. This according to Chief Economist of of Union Bank, Carlo Asuncion, a pause from the BSP is likely possible, especially after the US Fed had decided to also keep the policy rates staying put. They were even quite dovish there despite the inflationary threats. They did mention they would stay accommodative, so that might be spilling over as well into our Philippine Bangko Central decision. So one silver lining that could happen is that might be a good time to be entering here and buying on dips. And here to share with us his stock picks, we have with us Marvin Germo of Stock Smarts. Good morning, Marv, and welcome to the broadcast.
Hi, good morning. Thanks for having me.
Okay, Marv, let's kick off with the levels of 6,300. From a technical perspective, was this in any way expected? There seemed to be a strong support level of 6,400 that has just broken downwards. Will this trend continue, or is this just a knee jerk reaction to all of these announcements last weekend?
Okay, let's segment this into a couple of things. Looking at the chart, no, it's not just that it's a 6,400 support level. It's also where the 200-day moving average was sitting on, which is a very, very strong support from a technical analysis perspective. But that being said, leading into this Monday, majority of the indicators from MACD to all of the other shorter term moving averages were already showing a more bearish undertone into the markets. And if you look at and stretch the chart altogether, you would see it shaping into a downtrend where you see highs continually dipping altogether. So that being said, as what you've mentioned, all of this is brought about by not just the rising cases, not just also stricter lockdown measures, but uncertainty. At the end of the day, investors don't want uncertainty. At some point in 2020, people saw cases at around 1,000, and that was at the height of the Christmas celebrations. No one would have thought that we would accelerate at a higher rate than at the peak of 2020
Christmas, yeah.
altogether. Yep. So the name of the game for people now is up until I see clarity. It's okay for cases to be at a higher level as long as there's clarity. People know where this is going, but we don't know yet. We don't know if this stricter measures would be for just 2 weeks or will it drag on. Because if it drags on, then I really believe a more bearish sentiment would continue to prolong, and that would cause investors to either stay in cash, or those that want to deploy capital, they may want to see and wait up until things would clear, and that's when they would start to come in. Hence, more selling pressure.
Okay, Marv, despite the fact that we're at record cases now, no, approaching 8,000 already, we already hit 8,000 on Saturday, but we haven't naman fallen to the lowest of the lows level that we've seen last year. We were at 4,000 level, so medyo malayo pa rin naman. Are you worried that there's risk that we might be going there, or as you mentioned, there's still some clarity kahit papano, and what support levels are you seeing at the moment?
Okay, as of now, no, given that, as what you've mentioned, we've broken below the 6,400 level already, the next support levels to look at is at around 6,078, and then the next one could be around 5,689. So it could be a sharper dip should there be more bearish sentiment. But from 4,500 last year, I think we're still a great way off. And just to add context, no, I don't think we are going to shut down 90% of the economy. The team will be stricter measures but localized, which allows people inside Metro Manila to spend within Metro Manila. We won't go at a point where, similar to last year, mass transportation has been literally brought to a very, very small layer. And right now, we still have mass transportation, which allows goods to be moved in and out of the country still. So I think it's not as bad as what it will be, but it's really the uncertainty of how bad this will go, how high the cases will be.
Okay, Marv, now tell us which stocks you would be looking at to enter right now, because there was already these lockdown stocks, so to speak, surged na last year, and then there was already a rotation back to the cyclical stocks. We already saw airline stocks recovering finally. I mean, should we just be waiting because the long term outlook naman is that it would recover, or should you be thinking of re-rotating back to these so-called lockdown superstars of 2020?
Okay. If you recall our interviews from last year, I've been a very, very big fan of dividend stocks. However, people must be selective also on the dividend stocks that they have to be looking at. Meaning, I want the ones that are that will give me a good yield, but not just a good yield, but something that's predictable. And similar to what you talked about at the start of the broadcast, if you look at the telco industry, in my opinion, they fit very very well into that high dividend yields, but predictable. And as we lock down further, we've seen it already from last year that they remain to be resilient. And that being said, even look at PLDT from its drop from last Friday. It dropped by 7%. Which, if you look at the dividend yield for that, it would be around 6.6% from the drop of last Friday. And if you look at what's happening today, they're the ones that are actually up. So, uh, companies that have dividends that are somehow predictable, you could add telcos and utilities into the mix. That's one bucket. The
Mm-hmm.
second bucket that I would look into is these are for people that are willing to wait, that can also withstand the volatility. Because you're very very correct that people always talk about how bad the market is, but what people don't see is that we will recover. So it's a play also for people who have very very long term horizons, meaning you position right now, and then as we get out of this, whatever you invest in at the drops of the market, that's where you reap the benefits of it. However, please do know that these are for people. It's a game of conviction right now, because I think there will be volatility, I think there will be drops. I think that as long as we don't see clarity yet, there will be a lot of people wanting to stay in the sidelines. But this is what I do know: maximum uncertainty, maximum upside.
Okay. So of course, as you mentioned, look at the dividend plays for the time being. One interesting play that you are looking at, though, we talked about this offline, is Bitcoin and other cryptocurrencies. Perhaps is this the time to be betting on such assets? Do you not consider these, riskier? And do you feel that it's already overvalued, given the valuations that we've been seeing in Bitcoin?
Okay. This is Bitcoin, in my opinion, is a conviction play. Also, the reason why I am putting more attention into it is, number one, the world is shifting its view that it's becoming already a store of value, and Bitcoin has been out for over a decade already, and I don't think we're going backward. The longer it is, the more accepted Bitcoin will be. And the fact that corporations, not just corporations, but Tesla, what largest corporations in the world, are adding it to their balance sheet, just shows bits and pieces that somehow it's getting accepted already. Even though if it doesn't become a currency of the future, it becomes a store of value, it becomes a portion of people's balance sheet. So I think what's so interesting right now is access to it for Filipinos is not as hard as what it was 8 years ago, and the ability to be able to somehow no have a position on it while we're waiting for Philippine markets also to recover would be a good way also to somehow beat
Mhm.
inflation, and have exposure to something that could be very very exciting for the future.
Very interesting. So possibly a diversification play as well, even for local investors here in the Philippines for the time being, as we wait, of course, for markets to recover. Thank you for those insights. That was, of course, Marvin Germo from Stock Smarts. Here are the other headlines we're keeping our eyes on. BSP earnings plunged by almost 26% to 34.5 billion pesos last year. That's on the back of lower revenues and a net loss on foreign exchange fluctuations. The Bangko Central's revenues declined by 2.8% last year. That's from the 121.7 billion pesos recorded in 2019. Foreign exchange rate fluctuations cost the BSP a net loss of about 5.8 billion pesos. That's after servicing matured obligations, derivatives, and investments. That's a complete turnaround from the 14.7 billion peso gain made in 2019. Meanwhile, the lenders saw an almost 11% decrease in expenditures due to lower interest expense on term deposits and reverse repurchase facilities. Recall that monetary authorities temporarily suspended the term deposit facility option and slashed overnight reverse repurchase facility to address liquidity needs and cushion the impact of the pandemic. Now, the Senate Committee on Banks, Financial Institutions, and Currency is planning to increase the 10 billion peso allocation for the guide bill. Committee Vice Chairman Win Gatchalian said members will form a technical working group to refine the proposal. Gatchalian explained the current allocation is minuscule compared to the 1.5 trillion peso economic losses incurred by the country in 2020. That's why the lawmaker is looking to increase the budget outright or include a provision to allow the government to raise more funding later on. He added that the committee wants to make it the bill's primary mission to protect jobs and is targeting to sponsor the proposal before the session adjourns on June 5th. And the government's cash utilization rate in January and February has fallen behind the pace set by the Budget Department. The DBM says the national government used only 85% or over 448 billion pesos worth of NCAs in the first 2 months of 2021. This is 2 percentage points lower than the amount used in the same period of last year. The Energy Department posted the top cash usage rate at 98%, followed by the DBM and the Commission on Human Rights, while the DFA ranked last with a utilization rate of only 26%. The government aims to ramp up spending this year to drive economic growth and to recover from the record 9.5% contraction last year. That's why the 2021 budget is at 4.5 trillion pesos with a cap on the budget deficit of 8.9% of GDP. And that's a first look into the business day. Today is March 22nd, 2021. Catch Business World Live for the market close at 3:15 p.m. today. I'm Danie Laurel. Mask on, wash hands, and stay safe, Philippines. We are One News.